because there are periods of time where both stocks and bonds don't do well, but gold does well. So, for example, the 2000s decade or the 1970s decade, there are decades where just that slice helps a lot, and yet it's still underallocated compared to what you'd expect from looking at those numbers. Now, Bitcoin is like a rocket fuel version. I mean,
Hey guys, welcome back to Everyday Finance. In this video, Lyn Alden discuss about Bitcoin. According to Lyn Alden, the largest CH that everyone is sort of focusing on, of course. Owning and similar things matters. ETFs do too. The halving is important. But the halving isn't not necessarily matter in the few months leading up to the realization that Bitcoin's continuous hardening is really significant. However, there is a lot of variation surrounding the halving, and Lyn Alden would argue, a major portion of previous bull runs. That's because liquidity, rather than just possessing, had a greater impact on the timing. The presence aids in setup greater highs and lowers because of the amount of Bitcoin that is entering the market and needs to be absorbed, particularly in a bear market, really matters. But the precise timing of the 3 months that 6 months line think a year is much more determined by liquidity, and lots of things Lyn Alden discuss, so please watch the video to end, and share this video and subscribe our channel Everyday Finance. Thanks.
yeah, it's just a question. So I don't see any signs that Bitcoin is not going to continue to be correlated with liquidity. So I think one of the biggest challenges, everyone's kind of focused on the halving and things like that. And of course, that all matters. So the ETFs matter, the halving matters. The halving doesn't necessarily matter in the several months around the halving. Bitcoin's ongoing hardening is really important. But if you look at prior bull runs, there's a lot of variability around the halving. And I would say in large part, that's because it's actually liquidity that affected the timing more than just the halving. The halving helps set up higher highs and higher lows because it's how much Bitcoin's coming to the market that has to be absorbed, especially in a bear market, really matters. But the actual timing, 3 months, 6 months, 12 months, is in my opinion far more liquidity driven. So I think the ETFs are going to be helpful. People are debating whether or not they're a sell the news event. A lot of people priced in the ETFs, and is the first quarter underwhelming? It's certainly possible. That money doesn't just pour in as quickly as people think. One thing I would take the under on is people keep saying, well, what if, these tens of trillions of dollars of pools of capital have a 5% allocation, for example, or 3% allocation. And it's that's not going to happen anytime soon, most likely. One kind of description I've given is that it's been known for a while that if you have a gold slice in your otherwise 60-40 stock bond portfolio, it improves your risk-adjusted returns because there are periods of time where both stocks and bonds don't do well, but gold does well. So, for example, the 2000s decade or the 1970s decade, there are decades where just that slice helps a lot, and yet it's still underallocated compared to what you'd expect from looking at those numbers. Now, Bitcoin is like a rocket fuel version. I mean, if you look at that, Nakamoto portfolio or other types of resources that show what is adding a small slice of Bitcoin to your portfolio do, and it's astounding for risk-adjusted returns. So it should, you'd think it would catch on quicker, but some traditional pools of capital just take a long time to make investment decisions. Generally, when someone, a small business where the owner just has majority stake, they can make very swift decisions. There's some publicly traded companies that are still, a lot of the decisions still held by the founder. For example, MicroStrategy. They're able to make quicker, more decisive type of decisions because they have that capability. Whereas, firms that have a lot more spread out decision making, it can be a very long time to actually meaningfully adjust a portfolio strategy. So I do think that the ETFs are going to be helpful, maybe less so than people expect right away, but I'm hopeful. I think the other thing that could potentially derail it is a liquidity problem in 2024 or a stagnation in liquidity. It doesn't have to be a liquidity crisis, but it could be that you have just another stagnant liquidity situation. So you have 6 months of choppy liquidity, choppy Bitcoin, and it kind of lets out some of that consensus steam, and then maybe you run in 2025, right? So I'm not trying to predict any of those scenarios. Literally, if we look back at the end of the year, if Bitcoin has dipped into the upper 30s or if it's already six figures, neither of those scenarios would surprise me because it's such a volatile asset and there's so much marginal difference that can happen. But that's why instead I've been far more comfortable making 2-year outlooks, which is that I really don't know what's going to happen in 2024, but at least I feel like I have a higher conviction of what's going to happen with the combination of 2024 2025. So you absolutely could have a case where all these people are super bulled up for 2024, and maybe what they expect to happen it gets all shifted back 6 to 12 months, for example. I think there's a lot of scenarios like that. So far, we've not really seen any sign of distribution. So, when Bitcoin goes through, kind of major bull runs, normally some of those older holders start to sell into that market strength. Maybe they want to rebalance, maybe they want to consume, now they can finally afford the house they wanted that they couldn't afford before. And so you see some of that distribution as new buyers come in, and that process hasn't even started yet, based on any sort of on-chain analysis you look at. So I still think we're very early in this structural bull run, but I do think it's important not to take a bull run for granted. It's not necessarily like owed to you just because the halving's happening, or just because it's on that cycle. Now, I think it's probably still likely over the next 2 years, but it is important to kind of manage your expectations and risk accordingly.
According to Lyn Alden, what will occur when 2024 and 2025 are combined? So there is a chance that everyone is extremely prepared for 2024 and that their expectations won't change. Moving forward by 6 to 12 years months, for instance, Lyn Alden believed there are other situations similar to that. But we haven't really seen any indication of distribution. Thus, when Bitcoin experiences significant bull runs, some of those are typically older when holders begin to sell into that market strength. It's possible that they're trying to rebalance or take advantage of you. Some of that distribution appears as new purchasers, since they suddenly realize they can finally afford the house they have always desired but were previously unable to acquire, come in, and that, according to any kind of on-chain analysis you look at, that process hasn't even started yet. So Lyn continued to believe that this structural bull run is still very early, but it's crucial to remember not to take a bull run for granted. Just because something is happening to you doesn't mean that it should be owed to you. That cycle is still likely to continue over the next 2 years, but it's crucial to adjust your expectations and risk tolerance appropriately. Let's back to the Lyn Alden interview.
Yeah, it's a good question. So I want to point out that the Grayscale Bitcoin Trust already has like 500,000 Bitcoin. And so some of the concentration of custody risks that could happen from ETFs, I would say, have largely already been in place to some extent. Now, the majority of Bitcoin are not held like that. They're more distributed, which is a good thing. But there are some of these big pools that could be kind of either price issues or confiscation issues at some point, and that's not something that's gonna form. That's something that's already there. They're already kind of these big pools that are technically capturable. Another thing I would say is that there's a degree of inevitability to it, which is to say that any large and liquid asset is likely to get an ETF for it, and is likely to get banks wanting to hold it either for themselves or for their customers. So to the extent that Bitcoin was successful, it was always going to face this at one point. It's not like something that can't not be faced. So the question is, is Bitcoin itself designed in such a way that it's ready for it? I think it is, but that's still another test it has to go through. It had to get through like the block size war. It had to get through some early bugs in the network. It had to get through. There are some countries that banned it and then like flip-flopped on the ban. And there's challenges along the way, and I think this is another challenge that's going to materialize. So institutional liquidity has both a pro and a con. The con is the obvious one, which is you don't really want a lot of Bitcoin in ETFs or in highly regulated silos that are capturable. That's the downside. The upside is that more liquidity and more kind of automatic rebalancing of large pools of capital can help reduce the volatility to some extent, which then can make it a better money for people that are using it non-custodially, especially in developing countries. Right. Because if you ask people why don't you use Bitcoin, the number one is usually volatility. They don't understand it and it's volatile. And so to the extent that it becomes larger and more liquid and more kind of widely held, that can actually then encourage more of those small self-custodial type of buyers to enter. So I think that's number one. You know, the other one, I think the biggest challenge is kind of that privacy aspect, where the government doesn't mind if you have Bitcoin as long as it's in a silo. The second one is, okay, you can custody it, but they want to know you custody it and how much. And then the third one is they really don't want private Bitcoin self-custodially to move around, because that threatens their income tax model, that threatens their control over kind of sanctions, that kind of goes against the core of the current system. So they really don't want that. And I think that's kind of the bigger fight that's going to be had this decade is basically that price might be doing well, but that it's not really kind of changing things as much as you'd think, because it's held back by some of those frictions. The good news there is that so far it's been very hard to enforce that, right? So for example, Nigeria cut off Bitcoin from its banking system, and they remained having one of the highest adoption rates in the world, and specifically, according to Chainalysis, had the highest peer-to-peer trading volume in the world, because that's how they got around the bank blockage. And then we just saw in recent weeks, Nigeria's central bank is like reversing their decision to some extent. They're basically realizing that their blanket ban is not working, and that instead they want to try to bring it back in and regulate it a little bit, which is basically a way of saying we kind of messed up. We also saw India flip-flop on this. We might be seeing the process of Argentina, because they had done the similar thing where they didn't make it illegal to own, but they said, okay, banks can't get involved in the space as much as they want. Even fintech companies that are not banks still can't get into it. So they did this kind of series of restrictions to try to slow the outflow from the peso. But that's obviously probably going to be somewhat different under the current administration. And so we've seen a number of countries kind of bounce around on trying to do that, which is actually bullish because it shows how hard it is to do. In the United States, I do think that there's going to be a lot of pushback on privacy, a lot of pushback to maybe a lesser extent on self-custody. And that's where those legal challenges become important, because, kind of the strength and weakness of countries like the US, they have rule of law. And so it's not just they can just decide something and it just happens. We've seen, for example, the SEC keeps losing court cases, which is including kind of blocking a spot Bitcoin ETF for longer than they normally would be able to do. But court cases have challenged that. And so to the extent that the U.S. government tries to outlaw open source, non-custodial privacy techniques, or tries to outlaw self-custody, they open themselves to a plethora of lawsuits that are pretty hard to defend against, because basically saying it's illegal to keep a large number hidden, for example. That's it kind of touches on that First Amendment stuff. What if you design a privacy solution and you write it in a book, and all the code's in a book, which is basically what Phil Zimmerman did in the 90s. The government said, well, you can't export that encryption, that open source encryption you made, because we consider it a type of weapon. And he said, well, I'll put the code in a book. And so that's, now you have a constitutional court case to deal with. And so I think you could see similar types of battles in Bitcoin. But I think, unfortunately, that is going to be an ongoing, not just next year, but just ongoing multi-year friction about making life kind of hard for American Bitcoiners, or just Bitcoiners that kind of these types of governments can in some way interact with, to basically say, okay, it's, you have all these extra reporting requirements, or you're getting inquiry into this reason, or just kind of frictions that I think somewhat will be resolved by court cases, but it's not quick.
Lyn Alden draw attention to the fact that the Grayscale Bitcoin Trust currently possesses over 500,000 Bitcoin, and so portion of the concentration of custody risks that exchange-traded funds may cause have mostly previously been implemented to a large extent. Most Bitcoin are now scattered rather than housed in one place, which is a positive thing. However, there are some of these large pools where there may be problems with either price or confiscation at some point, and that's not something that will develop. Rather, it's already there. They're practically already quite large ponds that can be captured. Lyn would also add that there's a certain element of inevitability to it, meaning that an ETF will probably be created for any sizable and liquid asset. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance. And we will meet in next video. Thanks